Hello, Face. Hi, Kevin, Patrick, Ziggy, everybody, William Ford. Who else is here today? Everyone doing okay? Hello, Chi. Patrick, how are you? Patricia, Mark Brown, Kevin, how are you? Everyone doing okay? Andy, Hardianto, congratulations on your short Kiwi trade and your long Aussie yen trade. Hope you got out yesterday of that. Hello, Didier. Everyone doing okay today? So just a quick review update. Yesterday I talked about the dollar I still thought had more upside towards the 94 level. We'll have some confluence on the 4-hour chart between, looks like 94.10, 94.50. This is Tuesday, maybe there'll be a turnaround. Obviously, with Euro Pound making new highs, something that I said was a very strong possibility. The Euro's still working, but not to the degree that the pound did. Should have stuck with the pound from up here a few weeks ago. But the Euro also, from Friday's high, still looks vulnerable to me. I don't know if they're going to reverse it. And finally, here's EG. Thought we'd take out that spike high. That's exactly what's happened. We're getting some divergence on an RSI. So, you know, if you want to hear the ice crack, this is your first non-confirmation. See these spikes above 75, above 75, right there, 71. So this high on the 4-hour is underneath it. There is some divergence developing. Let's look at the 1-hour. I wouldn't bet the farm on this, but this is an area where you're getting some non-confirmation. There might be at least a scalp on a Tuesday, possibly back towards the moving average here, 90, 80, 91. We're gonna have to get back under this 90, 80 level for it to mean something significant, but definitely from here, we do have a non-confirmation. Everyone see this? Give me a Y if you see it. Hi, Craig, how are you? Okay. So USD CAD, Blake talked about it yesterday. It's trying to break out to the next level. Starting to have a little trouble here. The S&Ps, this looks like it was at least 61.8 back. Yesterday's one-day rally. Let's see what happens. Maybe you get a turnaround Tuesday action here in the stock market. And Aussie's a big story, isn't it? And I believe Blake was short Aussie yen or Kiwi yen yesterday. That worked out all right. So let's have a great day. Who loves Face? Anyone in here love Face? You know I'm not objective. I think it's the best online community on the net. If you find a better place, let me know. I want to check it out because we can learn from everybody. So I think Steve doesn't have real good coverage from wherever he's at on the ocean, so he's not here. I know if you're like me, I miss Steve's analysis when he's not around, although you can still get Steve's analysis every day, whenever you need it, right here. Okay, right here. You not only get Steve's, you get Gregor's, you get Blake's, you get Nick's, you get Stelios, you get mine in the room. So you guys got plenty of great ideas. In fact, I tell you what, this is what I'm going to do. Let's have a vote for non-subscribers. Which currency would you like to see? Oh, thank you, Ziggy. The analysis from all of our team. You guys pick the currency, and I'll just show you an example. Cable, okay? Any other votes? Angela goes for cable. Anyone second cable? Copy. Okay. I don't think we're going to have a unanimous vote here on anything. I need 2 for one of them. Gold. The first time we get 2, see, they're all different. Gold, cable, tide, Angel, oil. You don't have to vote, Glenn. All you have to do is click whatever you want to see. Isn't that a nice convenience for you? Okay, let's go with gold. Because up until yesterday, it was looking great before this recent dollar rally. And I'm interested in what they're saying about gold. Looks like there was some kind of update 3 hours ago by Grega. So if you're not a member, all you have to do is pick the instrument. So here's the big picture. This is supplied normally by Stelios. So you see it coming out of the trend here on the weekly. Let's see what our most recent is. Grega had something on Elliott Wave. So let's look at the Elliott Wave count on the gold. So Greg is saying this is a break to buy in here. And it does look bullish. This was a wave 1, this huge rally we had when everyone was worried about North Korea. That settled down, at least into the background a bit, and something else is going to reemerge for a break to buy for wave 2. I'm not an Elliottian, but wave 3s are what I call the money wave, because they're usually a fib extension of 1. They're at the minimum, if it's a 3, it's going to be equal to. So with my minimum knowledge of Elliott, but at times you can get 1.618 of this, which would be a real huge move, be about $70 from here, take you up towards 1330 or so. So there's Grega's look. Let's see if there's some confluence with Nick. Gold is back towards the 2017 highs. If it can hold about 1271, should higher. See, 1320. So that was, that's some type of fib extension. And that's a big formation that Nick has up here. CD equals 61 of AB at 1320. So it looks like there's a consensus for 1320 between Nick and Grega. Then you go to Blake's work here and Steve's work. And you have this little pullback here. Let's see what the commentary is. Maybe developing a bull flag, overall pretty bullish, and the obvious 1300. Here's candlesticks by Blake and Steve. Pretty much it's the same chart. You'll see a lot of the same charts between basic, technical, and candlestick. So there you have it, guys. And it only takes one. Thank you, Angela, or Bill. You're talking about Euro Pound? You do the right thing today, and tomorrow will take care of itself. So I'm not sure if this is going to be the beginning of a major top, but we're coming off. So even from when I talked about it 5 minutes ago, you have about 10 pips. So for now, maybe just look for this, maybe 90-80, because sometimes it takes time. Everything takes time, doesn't it? Even learning how to trade takes time. You can't learn experience. It only comes with the passing of time. And you guys saw my picture. So a lot of time has passed since I entered the business with black hair. So here I am with my silver crown, and it's NFL season, and I'm fading back into the pocket. Blake Morrow, he's on a fly pattern. Now he turns it into a post. I'm being rushed by algos and black boxes. They're trying to take me down, Blake.
I guess I'm gonna have to take it from here, huh?
Yeah. So let me get the pass off. Oh, I'm left-handed, so be aware of the spin on the ball, buddy.
I got it. All right.
All right.
How you doing, Dale? You're excited about football season. I take it.
Are you kidding me?
That's awesome.
I'm on my knees like, those guys from Saturday Night Live bowing to the set, just hearing the pads hit, so
That's awesome.
yeah.
Well,
How are you? How you doing today?
Good. I got a little turned around in some of the yen pairs last night. You were talking about the New Zealand yen. I was short yesterday, and then I closed out for a small profit. And then last night, I put in some offers to sell the New Zealand yen when it hit 80.50, or excuse me, I'm sorry, 80.20. And so when it hit 80.20, I got triggered into a short, but it rallied all the way to 80.58. So I mean, I'm still short, but I got caught a little upside down. I didn't think it was going to be so explosive, and I was short the pound yen and got stopped out of that one. So because I shorted it right at this, not at the highs here, but I got short at like 142.50, and then I put my stop above the highs. And it spiked up. I mean, it spiked up, and we even though it's come right back down again, the guppy has. But the yen pairs really took off yesterday because the Nikkei spiked up, and so we got a lot of yen pair movement overnight. And I'm looking for re-entries too. I got stopped out of the pound yen. I'm like, I still don't mind being shorted. This is obviously very choppy. You can see, how we went through this. We went through this trend line. We hit the 200-day, bounced off the 200-day. Now we're already showing a reversal. If we do get what you talked about, like turnaround Tuesday, which by the way, last week you called it perfectly. And we got a great reversal. If we get some sort of reversal again today, these yen pairs will probably come back under assault. So I don't mind looking around for shorts, but it's summer and things are very whippy. So you got to be a little bit more careful. At this point, excuse me, you got to be a little bit more careful because there's not a lot of liquidity. So when the volatility comes because of order flow, you can get some volatility there when there's order flow, and that's a great example of like what had happened in Asian trade. There's just not a lot of liquidity, and all of a sudden you got like this happen. And I happen to actually be at my son's first soccer practice last night when I was trading. And we went from 142.15 all the way to 143.15. I mean, that's a 100 pip move just over a couple hours. But in Asian trade, we went from 142, basically 142 and change, up to 142.80. It was just like
that's pretty rare for Asia to come in and create that type of magnitude, isn't it?
Yeah, it is. And again, this is a product of not a lot of liquidity and order flow. So you get, not a lot of bids and offers out there, and then you get a big orders getting pushed through the market, and you're going to get, these big moves. And you see the euro yen did the exact same thing. Dollar yen made a big push, like just out of nowhere. A lot of people are attributing it to Dudley's comments yesterday, but this happened all in Asian trade. So, here's the Aussie yen did the same thing. New Zealand yen did the same thing. And so, like I said, I got orders triggered into some trades, and I even got stopped out relatively quickly on my pound yen. But it happens, and it's kind of part of summer trading. There's that lack of liquidity factor that you got to take into account. So
I'll be glad when the adults come back from the Hamptons.
Me too. I love trading in September throughout the rest of the year, up until about a couple weeks before the Christmas holiday. Liquidity is great. Usually volatility is higher. So that's what I'm always looking forward to. But what we do have to look forward to today is we have retail sales. And that's coming out in like the next 15 minutes. We got retail sales, we got Empire State Manufacturing. So I want to take a look at a couple of the majors before we do, before the data hits. So the euro dollar is still, this is such a major support that we're on.
Yeah, you called it yesterday. 117 it was no man's land yesterday, and you said you couldn't buy it until maybe it tried 117, and we're getting a little bounce from there.
Yeah, we did. We got a bounce. We got a bounce from 117 a couple of days ago, and then we were at like 118 or just 117.80 or whatever yesterday. I'm like, I'm not really too comfortable with it where we're currently at, and I'm still not. I mean, I look at the euro dollar, and as long as it's trading above 117, 116.90, you got to be careful with playing the dollar on the long side. I mean, I think the dollar there's one place and one place alone I'm really looking for the dollar. Well, actually, there's a couple places, but really, it's at the Canadian. The dollar Canadian has been resilient as all get out. You look at this pair. We are at, and here I'm going to take this fib level here. Okay, you can see this fib, right?
Yeah.
We're at a 38% retracement. It's previous support, current resistance. Nothing's changed here. But what we've done is we continue to knock our head up against this 127.60 level. We're at 127.40 right now, or 38. Look, if we have some strong dollar data or strong US data that produces a dollar rally, you guys got to be looking at the US dollar Canadian, because if this thing breaks 127.60, it is going to start squeezing. I wouldn't be surprised if we squeeze 100 pips between now and tomorrow. We go from 127.60 to 128 and change. I think it's entirely possible. Now, the dollar Canadian, again, it's on my radar. You can also look at it like, well, I can short it here and put at 127.40 and put a stop. Excuse me. I didn't mean to yawn on you guys, but put a stop above the highs and reverse and go long on a breakout. You can do that, but what I am going to say is it has been extremely resilient. It has not pulled back. If you're short the dollar Canadian, you are probably extremely frustrated, and the longer it sits up here, the more likely it is to squeeze shorts. So that's going to be my warning for those of you guys that are thinking about shorting, is that it's not going down. And what I always say is, if it doesn't go down, it's only got one other way to go, and that's usually higher. You know what I mean? So the longer we sit up here, the more frustrated shorts are going to get, the more likely they are to start getting squeezed. So the dollar Canadians, and I'll be here for the news. So the news is happening in 12 minutes. We'll see if we can get a reaction, because if we do, I am going to be personally getting long some dollar CAD. The pound also extremely weak. We're getting really close to the 618 retracement now. Couple of the guys were talking about looking at the pound at the 618, not necessarily to buy the pound dollar, but one of the other currency pairs that you can start thinking about is something that I just shorted, the euro pound about 5 pips ago. Now, why? Because we're at an 88% retracement and we're at the top of an ascending wedge. Now, I'm not going to get aggressive until we get below 90.50, and you can see this even last night. We spiked to 90.50 and bounced right back up again. So this is it's showing you. And I've had this this line drawn here since yesterday. We spiked to it in Asia and bounced. Now, I shorted it just up here, just about 7 or 8 pips ago, and I really want to get aggressively short below 90.50. Now, that's because that's when it triggers a pattern. That when it gets under here, I'm kind of anticipating it.
Yeah,
but
nice look.
Again, if the pound dollar can hold the 618, and let's say the euro comes under pressure. So let's say the euro breaks through 117. The euro breaks through 117, 116.90, but the pound doesn't really go down, or it goes down, but it doesn't go down too far because it's got this big golden fib sitting right here, you know, maybe it goes down 20 pips, but the euro goes down 40 or 50. Well, then that means you have the euro pound that really starts to fall aggressively. So, you know, again, I don't know, I don't really have a plan on what I'd like to do with the pound per se, like the pound dollar or the cable, but the euro pound is where, you know, where I'm specifically looking. Okay.
Yeah, you're looking for relative strength to start holding up better in the pound than the euro.
Right, right.
No matter, even if they both go down, the pound may not go down as much.
Right, right, exactly. So, hold on really quick. I'm still here.
Ziggy said my first trade was on a stone tablet. No, that's Moses, Ziggy.
All right. Okay, so sorry about that.
All right.
Yeah, I don't know if you read that, Dale.
Yeah, I got it.
Okay, so take a look. Okay, the Aussie, we're sitting on really critical support here, like right at critical support. Hold on. Okay. So the Aussie dollar is sitting on, you know, this is the breakout point. This is the level that we've talked about time and time again. Okay, it's just sitting right here. This is a risk that the Aussie starts breaking lower. Now, you can play the Aussie if you want on the short side if you want to play the dollar, because I think the dollar can bounce. I mean, the dollar has been so beat up. I mean, all we need is just a little bit of sunshine for the U.S. economy, and the dollar can get a bounce. So you can't play the Aussie to the downside. One of the other things that you could do is what we were just talking about with the euro pound. Look at the pound Aussie. Well, if you think that the pound Aussie is, you know, if the pound's done going down, or it's close to finding support, but the Aussie isn't, this pound Aussie is right at triangle support here. You know, you can see it right here. We're right at triangles. It does look vulnerable, but you know, things always look most vulnerable when they're.
Yeah. But I mean, compared to euro pound, relative strength wise, it's much weaker. It's been on its way down forever.
Yeah. Yeah, I mean, you're right. But you know, the pound Aussie, again, if the Aussie breaks down, the pound stops going down, we could also get one of these. You know, we can get a move lower like this, and then, you know, and then a move higher. You know, like a little false break. That's entirely possible. Again, I'm looking at some of these cross rates because I'm not 100% convinced on the dollar either. You know what I mean? Yeah. Like, I look at the dollar and I go, well, you know, the dollar is in obviously a very bearish trend. So playing the dollar to the long side is counter trend. So where else can you play some of these cross rate effects? And then I start looking at some of the, you know, some of these cross rates that might provide opportunity if I don't want to be long the dollar, especially in,
you know, Blake, that's a great chart. You know, I had debates with people because, you know, how technical analysts can become anal, you know, the way they're taught. And I was always taught that head and shoulders tops are reversal formations. They happen at, you know, highs or lows. And someone told me about a guy that they read that they're also continuation formations.
And head and shoulder patterns?
Yeah. Yeah. And that looks like one. I mean, you know, basically, yeah, you know, there's a neckline and you have a head and a shoulder, the head up around that 167, and you drew the neckline, and that would be a measured move. So some people think that head and shoulders formations happen as continuation formations. And after that guy showed me a few, I've been converted, and I see it.
You know, I don't trade that way because I always look for an arm, and they are reversal patterns to me. So that's what I look for. And because this way I can measure, and I know where we're going is not uncharted territory. When you don't have an arm, so this is gone.
Yeah.
Becomes uncharted territory. It's really harder for a currency pair to travel somewhere that it hasn't been in a while. Does that make sense? Or any instrument. So I think they can work, but I think if you look longer term and you go, let's take a sampling of 100 different trades and you do 100 of those, I would venture to guess your success rate is going to be less than if you look at a head and shoulder pattern from a reversal candle standpoint. So it's kind of like a sport, you know. It's like, okay, if you swim, this is proper form, and if you use proper form, the likelihood of you beating other swimmers is probably better. You can still swim and kind of be sloppy, but you're probably not going to be as fast, and you're probably not going to win as many races. You know what I mean? Okay. But you're still going to be able to swim. So you know, that's the way I view it. It doesn't, you know, I like to do things by the book, but is technical analysis imperfect? Absolutely it is. And so that's why I think you can have different variations of things as well. I tend to look for more high probability setups. That's why head and shoulder patterns are good. And let me explain like the reason why, and we only have a couple of minutes, but I'll just really quick. The reason why head and shoulder patterns work, okay, like shoulder, head, shoulder. That was it. Yeah. So the reason why they work is because you get a failed rally attempt. Like you're in a bullish trend, and then you got a rally, failed rally. We don't make it to new highs. Then everybody who got long here turns around and bails, and then that's what creates the reversal. Again, you have to look at like what's the anatomy behind the move.
Great mentoring, Great mentoring, Blake.
Thank you. So, but that's why it tends to work better as a reversal pattern. What I've found. It doesn't mean it won't work though. Again, it's like I can look at somebody and I can coach them and again, going back to my swimming analogy, I could say, well, that's poor form. You know, that's poor form. You're still going to be able to swim, but if you don't correct your form, you're never going to win races, you know, but you're still going to swim. You're not going to drown, you know. Same thing with some technical formations too. That's why I try to.
Everything's probabilities, and you want to go with your higher probabilities when you're risking capital.
It is. Now, one last thing. We do have data coming out here. So we got the dollar yen. The dollar yen has made a significant rally, and this is one of those things that we had a false breakdown. You know, this false breakdown at the end of last week, and what we did is we actually held the support. Oops, I didn't want to grab that, but I wanted to grab the blue line. But you guys can see the little really strong support here. So the dollar yen has rallied quite significantly. The 38% retracement comes back at like 111. There's a good chance we can head up there today. I mean, if the dollar strengthens, the dollar yen could head back to 111. So, and the dollar yen's been really tricky. I look at all the yen pairs, and you know, the pound yen was breaking down and is still threatening a breakdown. The New Zealand yen, you know, the euro yen still came out of an ascending wedge. So I'm not convinced that this bottom is really going to hold longer term, but it is right now and has squeezed a lot of traders on the short side. We're going to watch
Greg and Nick, Blake, last week, their analysis pointed towards that low. I mean, I talked about it the day before. They were both looking for a low right in that area. So subscribers would not have been short down there, and they would have been looking for long. So, I mean, great analysis by Nick and Greg. And when those two are in confluence, it's pretty high probability trading.
Yeah, and that's, you know, and the thing about Elliott waves and harmonic patterns specifically is they're looking for turns, and that's and you have to know that going in and looking at their analysis, and it's good when you can get that confluence, and that's the important thing about using ForexAnalytix is having multiple types of analysis. And also, you have a certain amount of comfort with the analyst that's providing it. but it's having the different types of analysis all wrapped into one package. That's the power of ForexAnalytix. Okay, guys, we have retail sales, and we have retail sales and also Empire State Manufacturing, and then import prices. We're going to see if this is good or weak dollar data coming up right now. And I've just got it on a 5-minute chart. There we go. We got some strong data. Looks like the dollar yen is pushing higher. Yeah, that's really good. Watch the dollar Canadian. We're approaching that resistance here, and we're getting close. Empire State Manufacturing was a blowout number. Retail sales, both blowout numbers. Really, really good data. Really good data. And the dollar yen, or the dollar Canadian, is breaking higher. Hold on. And it just broke. Whoops, I bought a lot of dollar Canadian. Way more
and
than
Euro pound selling off, Blake. Nice call.
Thank you.
And the dollar's headed towards that 94 level I talked about earlier, yesterday and today. So,
okay. Sorry, I bought a truckload of dollar
man.
Canadian.
What can you say?
Yeah, and yeah, we're seeing a big move here. Hold on, let me gotta get out of a little bit more of this. I'm taking profits along the way, so just letting you guys know. Okay. So we have the euro is closing in on that 117 level. Yeah. Sorry, I had to get out of a little bit of it. I bought way too much of it. I did not mean to buy that much. So here comes the euro right into support. You know what else I really like? I like the U.S. dollar Norwegian krona. That's approaching some pretty good resistance here. Yeah, this dollar Canadian is looks like we're going to squeeze up towards. Let's get over to it. Here's the dollar Canadian. Here's the 4-hour. We're coming up. I have an alert set up right here in the 80s just to see if we need to get past a lot of these stops, but still look pretty strong here in the dollar Canadian.
There go the bonds too on this. So, weak bond market, part of the dollar recovery here.
Yeah, bond market is falling. Yields are rallying. It's good. It's a good look for the dollar.
Yeah.
Wow, dollar, it's huge. Retail sales 0.3% higher than expected. Core retail sales 0.2% higher than expected. Very, very strong data.
Revisions are higher as well. Sorry.
Oh, thanks, Delios. No, good to hear from you. How you doing today?
I'm okay. I'm a bit busy with a new pup, but yeah, it's all good.
I bet you are. I bet you are. Let's see. Stocks are responding positively. They've bounced a little bit. Let's see what that dollar yen's doing. The dollar yen could probably, especially with bonds slumping, we could probably see this 111 area in the dollar yen. Yeah. It's looking quite possible.
Because Greg is looking for new lows in the bonds now that this was this whole rally, and that we're gonna make new lows. So that should be yen positive for a while.
Hey guys.
Hey Greg, what's happening, man?
Wow. Speaking of the Wizard of Waves, here he is.
The Wizard of Waverly. I don't know where did that come from. I don't know where that came from. Anyway,
Wizard of Waves.
Wait, no. There's something there. It's forget it.
Oh, movie? Is it a movie?
I guess I don't know. Maybe pop culture or something or other. I have no idea. So, well, hey, good to hear from you, Grega, and hey, Stelios, and hey. So, what do you have? Because okay, so the dollar. Let's talk about the dollar really quick, Grega, and then I want to hear what your thoughts are here. We have the dollar that is closing in on 94. We're actually right at resistance right now. So what do you make of this dollar where we're currently at, and oh my God, we're blowing up in the dollar CAD. What do you make of this dollar right now, especially given as oversold as it was?
I just think that we are just in some corrective degree of a higher degree pullback. So I still assume that this is not going to be any new trending change back to bullish dollar. I just think it's a temporary bounce and that we'll see again reversal to the downside, but maybe we should wait till the end of the month or maybe till start of September. But I see it in a wave 4 of a 5-wave incomplete bearish cycle on dollar index, looking from 2017 highs.
Could you show us what you're looking at? Because most of us are not Elliott waivers, and like I have a hard time grasping exactly what you're talking about. I'd love to see what you're talking about. Here, I'll pass it over to you, and I'm sure everybody else would too. So, and I'm gonna sit here while you're. I'm gonna stay here because I'm just sitting in my dollar CAD now.
Yeah,
so.
Nice analysis on calling the yen low, Grega. And looks like the bonds are on the way for what you called the end of 4 and on their way down now.
Yes, but that's a big prediction, this 5th wave down on bonds. Actually, I have this chart here. So maybe we can first look at this one. Actually, you can see here that you mean this 5th wave down, right?
Yeah.
Yes, that's actually a very big move. Okay, so I'm not really sure how high stocks will be in such case, because if we really get this strong sell-off on bonds, then you know that stocks should really explode to the upside. So I would be a little bit more careful with this outlook, but for the short term, I just think that we could maybe go back down and retest this double bottom here from May and then from July. So for now, yes, I would expect next leg to be down on bonds. So during this time, I think that dollar index could see higher prices here in a corrective wave 4. So for those who are not familiar,
So you're really looking above 95 then.
Yeah, 96 is.
Yes, back to 95, let's say, yes. It's actually some kind of a range of 2015, 2016 price action. Okay, so actually in Elliott wave principle, and a flat correction, it's a free 5 structure. So we have a 3 waves down for wave A, then you have a 3 waves up for a wave B, and now you would expect a 5 waves of decline down into wave C of 4. And normally wave C of 4 will either complete itself around the levels of wave A, which is around just below 92, or maybe will make a spike below it and then turn to the upside. Similar like has happened here in a wave B. We have seen a break to a new high and then a reversal. So I would be looking for more weakness after wave 4 to make wave 5 down. And what is really interesting is that even if you think that dollar has put a top here in place, okay, and that this is not a corrective movement of some larger, still bullish trend, you would still need 5 waves of decline because that's an impulsive structure. Okay, so actually on the long run, it's not important if we are going back to bullish mode on dollar index to retest these 2017 highs, or maybe we will continue straight to the downside. In either case, I would look for more weakness after this pullback up into wave 4 and then expect a wave 5 down.
Like it.
So actually, I don't have any strong.
Like it means something to you. Does it mean anything to you if I like it?
Sure. So actually, now the question is, will this wave 4 will be tradable? Normally, 4th waves are very tricky. Okay, here it was wave 2 pullback. It was quite deep compared to wave 1 and sharp. So maybe this wave 4 will move more sideways. Okay, so I'm not really sure if this will be tradable for the next few weeks, but those who miss the train on the long side, I think that if we are in a first 3 wave corrective recovery, there should be watched first resistance at 94.30. Okay, and then we see what happens there. Simply because, as I said, this is wave 4, and I'm not sure that we will continue straight to the upside in this wave 4 because it can be a very complex pattern because it's a corrective pattern. It's not tradable. Tradable legs are wave 1, wave 3, and wave 5, not wave 4. Okay, so you want to see wave 4 completed before you want to make any action in such case in the direction to the downside. Okay, at least speaking for the midterm, for the next few weeks of price action. So in such case, I think that euro dollar is actually in a similar base there. If we take a look on euro dollar,
another good call.
Here we can see a pullback. I would watch out for these wave B swings. Okay, here at 1.160, and more importantly, maybe this trend line connected from 2015, 2016 highs. It was decisively broken. So looks like that we could see a retest of this region and then turn to the upside. So again, it's a wave 4, and we need wave 5 to the upside to complete wave C. Okay?
That makes sense.
Yeah, I'm telling you guys, I'm an intelligence gatherer. I've really always believed in it. And in FX Street, it was a guess in the community. But, you know, people are wondering why, you know, some of the things I tweet, besides, you know, my own stuff, which, you know, it's not that complicated, 3 drives and RSI stuff. The reason why my accuracy, calling and forecasting has gone up since April is because of this team. And really, if you're serious about trading FX, there's not a more convenient and time-saving way to do it than to be a subscriber to this team. You know, so, you know, people that know me know that I'm not saying this just because I'm part of this. I'm saying it because it's true. So, you know, click that subscriber button, because, you know, I could pull up Greg's stuff anytime. You know, I wake up early and I can't sleep. You know, I could go over all of Greg and Nick's and Blake's and Stelios and Steve's stuff, and it's going to make you a better trader. It's, you know, if you're serious about trading, it's really a very good investment in your future as a trader to have a subscription to ForexAnalytix, in my extremely accurate and humble opinion.
Did you say you're extremely accurate and humble? Yeah, I love it. Hey,
anyway,
Greg,
it's not a pitch. I mean, it's not a pitch. I believe it. And I think that people that follow me on Twitter are seeing the difference too between, you know, prior, you know, my hit rate on calling things is much higher now than it was before. So, and it's because of you guys.
Excellent.
Well, that's mostly Greg and Nick. Oh, I'm gonna hand that to them. So hey, Greg, can you take a quick look at the euro dollar, Greg, and tell us what you see there, because you know, the euro is obviously testing some pretty key support.
Yes, as I said, I am expecting this wave 4 on euro dollar back towards this old swing high here from May, and maybe even then deeper correction for this retest of the trend line. So I would be looking for this move to unfold, as I said, in a wave 4 as a complex correction, similar like I'm expecting to the upside on dollar index, and then watch out for next leg to be higher. We will be wave 5. So it's same structure as on dollar index. So now maybe when someone is asking what is tradable during this time when we expect this some kind of a corrective movement, and if you still think that dollar is showing opportunities to be long, then maybe watch out for trades against the weakest currencies. So you definitely don't want to trade be long dollar against the euro, maybe rather pick up against the pound. Pound is much weaker than euro, and it looks like there we have much clearer wave structure that could take us lower. So if someone wants to be in the dollar, then maybe I suggest to look for trades on cable rather than on euro dollar, because I think that today, for example, we are down what almost 100 pips since worse than expected CPI figures. So it looks like this momentum could just increase even more if we see this correction here or down on euro dollar and up on dollar index.
That makes a lot of sense. The one thing that I did note earlier is that the euro dollar, or excuse me, the pound dollar is really close to that 618 retracement. So I was, a little skeptical on how much downside there's left in the pound dollar, or at least near term. That's why I was like shorting the euro pound this morning, because I thought the euro pound could make a turn if the euro is going to come under some pressure, and the pound would have held tight a little bit. And so I was looking at the euro pound more as a short, just in case, because the pound, you're exactly right, has really accelerated lower, kind of leaving the euro in the dust, if you will.
Yes, actually pound is showing a lot of weakness against several pairs that I just looked into them, especially pound Aussie is also looking very bearish to me. Firstly, if we take a look here on cable, we are at this important trend line, but I see it as a trend line of an ending diagonal, so I do not expect any hold here, any bounce. Actually, I'm expecting a breakout, then maybe retest, and then even continuation to lower levels, simply because we made 5 first legs in 5 waves of decline from the highs, then we went sideways, and it looks like that we could now even accelerate lower into wave 3. While the dollar index is in a corrective phase to the upside.
So that would make the euro pound corrective scalp, Blake, based upon what Greg is saying here.
Yeah, interesting.
Yeah.
Interesting. Well, cool.
Also, here I want to highlight this pound Aussie, as I said, because it has a really nice looking wave structure. We cannot ignore bearish trend since 2015 highs. We have lower lows, lower swing highs, and more importantly, we recently made this big flag, but still in 3 waves from those lows in September of 2016, and now looks like that we are trying to break this support line. So ideally, we will see a continuation to the downside very soon, actually, and I'm expecting this price action to continue to stay bearish, and maybe firstly retest this wave B swing low, from March, and then obviously attacking this. So, and the reason why I'm looking here for this trend to continue lower is, simply put, it was a 3 wave rise. This is is a structure of a corrective movement. So it was confirmed that this is a correction because we made then 5 waves of decline. This is an impulse, and you definitely want to trade in the direction of impulses, and that's the one. It should be to the downside.
Awesome. So and we were just talking about how the pound Aussie, could be one of those that could bounce as well. So this is a good example, huh, Dale, of like the confluence that we were discussing.
Yeah, and he wasn't here. And here he comes and just confirms exactly what we were talking about. I mean, I really like Craig Emmett's comment.
It can bounce, but even if we bounce, you can see I marked his here resistance at 171.20. So it can move to the upside still into wave 2, because normally wave 2 will retrace in a corrective phase back to the region of a former wave 4, and this is here. And normally wave 2 will be more complex than you would say that maybe wave 2 is finished here. You would expect something more complex from it, okay? So I would not be surprised if we see a bounce higher, as you said, and then turn to the downside. In fact, I'm not really sure if I want to chase this market on the long run, looking for longer term positions already here, because I think that there could be better opportunity if we get a bounce on better price.
Nice.
Yeah, okay. Hey guys, I gotta step away for just a couple of minutes, just like 5 minutes. I'll be right back.
Sure, no problem. Also, I can take a look at DAX. I think that me and Steve discussed about DAX a few weeks back.
Yeah, at the lows.
Yes, actually, we said that we expect a bounce.
Yeah.
Because clearly we made a 3 waves of decline. We also filled that gap from French elections since April. So it looks like that now turning point is here. We have a nice bounce. Clearly, we completed this 5 wave decline for wave C. So I'm looking now for continuation to the upside. And here on the right, you can see hourly chart. I'm expecting a pullback into wave 2, let's say in the next 24, maybe 48 trading hours, maybe even go back to this gap and then continuation higher. So I would expect DAX to move to the upside at the same time. As you know, then yields, or I should say prices of US treasuries should continue lower, which means that it makes a very nice move to the upside for dollar yen. So I will personally keep an eye on this dollar yen, because I think that could be a nice opportunity maybe after a pullback here into wave B while stocks are trading to the upside. So I will watch out a 30-minute chart. Actually, firstly, I thought we will continue to the downside from this upper channel resistance line, but current breakout higher just confirms how bulls are strong here, and that it makes even stronger conviction that I should look maybe for longs after 3 waves of retracement. So definitely I will keep an eye on this one for this week, let's say. But as always, I don't like to chase markets at the highs. I would rather wait on a pullback. So ideally 3-wave setback. Now that we are higher, I would look for these supports here around 110 and then maybe 109, 109.80 level. But as I said, we need 3 waves of retracement first. Okay.
Rugged, has yesterday's bounce in the S&Ps changed the recent view that you had that we probably get an ABC? Because if we're going to get a C, don't you think it should start from these levels here?
Yes, actually. Firstly, I thought that we put a high here in place because the flag, as you can see here, was extended. But actually, once I reviewed the charts, it's not surprised to see this lag in extended as in wave C on stocks, because as you know, because of fear, a lot of investors will get out, especially Wall Street. So it's not a surprise to see an extended wave to the downside. But again, market proved to be only in a corrective phase, like each time for the last few years. So there's no difference here. Still, we are looking to the upside now, again, back to new all-time highs. But ideally, this will be only a 3 waves move, because we could be making here an expanding diagonal for wave 5 of much bigger degree, wave 3. So I would be looking maybe for a retest of this upper channel resistance line, and then watch out for a reversal lower. But for now, we should stick clearly with the bullish view, especially once we get this wave B pullback. Also, maybe watch out for some head and shoulders pattern here.
Yeah.
If we hold current levels, okay, then maybe this could be very interesting after a pullback. Okay, so left shoulder, head, right shoulder, wait on a pullback, and then watch out for a break of these swing highs to continue higher.
Thank you, buddy.
I'm expecting more upside here. No problem.
Okay, and you know, Blake's been talking a lot about US dollar CAD, and you know, we're challenging resistance levels. Are you looking for maybe during this bounce 4 in the dollar, maybe Canada get back towards the 130 handle?
As dollar index is in a pullback mode, if there are any currencies that could stay strong are still commodity currencies. And what I'm looking at here is actually that we are in a temporary bounce now, just approaching this resistance line here, as you can see. It's actually a parallel trend line of base channel. What is the base channel? Is actually you connect. This is from Jeff Kennedy, if someone wants to follow him from Elliott Wave International. So actually that's his method. This is the high or start of wave 1. Okay, then you put and connect this line with the high of wave 2. Okay, right here. And when you see the parallel line that you put it at the bottom broken here, then this is normally an evidence that market is in an extended powerful lag to the downside, and typically that represents wave 3. So this broken support line confirms that this was wave 3. And what is really interesting is that after any pullback, these trend lines should hold. Okay, and we are exactly at this trend line right now.
Interesting. Yeah.
So
Okay.
I would not be surprised if we see maybe a reversal to the downside, but clearly this could resume into some sideways consolidation. I'm not really sure if we get any significant break to the upside yet.
Okay.
Also, crude oil should be watched here very closely, of course. If we break to the downside in crude oil and maybe close beneath 47 today, then I don't know, maybe I will have to maybe adjust this wave count, but on the long run, I think that dollar CAD could still see more weakness.
Thank you, Grega.
No problem. Thank you.
Great having you here as always. And
yeah, I was going to say, Greg, thank you for your views. Really, it's always a pleasure to listen to your thought process.
Sure, thank you. But like anytime, but you know, I just need time to join you on a webinar. So when I'm available, I'm here. No problem.
Oh, we love it. And speaking of which, the euro is right at support right now. So, all right. And hey, and really quick, Dale, before you continue, you've got Alan Farley coming in, right?
yeah, Alan's in the room right now.
Alan's in the room. So for those of you guys that don't know Alan, I'm going to just speak about him really quick while Dale is right off the mic there. Alan is a Phoenix native. Actually, he'd probably get upset if I said that. He's a Tempe native. Maybe I should say that. But he lives not too far away from me, probably about 45 minutes away from myself. I've met him in person several times. We've worked together. Over the years, we've done some filming, and he worked with the Wise Trade Group back when I did work with them, and I've known him, but way before that. He's had a website since the beginning of time. I want to say since he was one of the early internet adopters. Yeah, his website was called the Hard Right Edge, and I'm sure it's still around. I used to use it a lot when I traded equities back in the 90s. And he's just a really neat man and a great analyst. So I think you guys are going to get a lot out of what Alan has to say, and I'm looking forward to hearing him as well. So Dale, I'll turn it over to you, and I know you're going to bring him on. So I'm glad he could be here on the FACE webinar today.
I'm glad we got the time straight. So without further ado, Alan, I'm going to make you the presenter and look forward to hearing your voice. Alan and I have spoken once before at FX Street, and it was near the lows, I believe, Alan, in January of 2015 before the big bull move, and you were sanguine and constructive. So how are you today, buddy? Just waiting to hear your voice, and maybe you want to do a screen share as well. We hear you.
I can hear you. Can you hear me? I can hear you.
Perfect.
Yeah, I can hear you, Alan. How are you?
Don't ask me. I have no idea. I know it's so professional. I understand.
Oh,
I gave up professional a long time ago.
Oh, Alan, you should have seen me the first day Blake and Steve had me in the go-to-meeting room. So, I understand, you and I had to be drag kicking and screaming into the 21st century. So great to have you. Nice to have you here.
I'm glad everything works. I'm glad we didn't lose all of the people listening in. So.
Are you going to be sharing a screen? You have that option if you want. Otherwise,
Sure.
We could just do an audio.
No, I will share my screen if you'd like me to.
Okay. Let me turn my volume up. Maybe you could get a little
closer. The stock guy talking about the euro, so it really has no value.
All right. So before we get to the markets, Alan, how does it look for ASU this year?
ASU. Well, it's always good. I think partying will be at an all-time high on ASU.
Do you go to their games?
I don't go to their games, but I have 2 ASU graduates in my home here.
Okay. So, buddy, here we are at all-time highs, new administration. Last time I talked to you, in fact, I'm going to pull the S&P up and show my screen. I don't know if you're going to show yours. I don't see
it. It says, when ready, please close confidential windows. When ready, show my screen. I'm ready.
Okay.
So it says show screen. So am I doing something wrong and not showing mine?
Okay, so let's see, is your screen up? The
Yeah, my
screen's not up?
to show my
Hey, Dale, why don't, there it is.
Okay. Okay, so you know when we were talking, Alan, last time it was 1,800 S&Ps. And it was, I think, a year and a half ago in January, while the market was under pressure and people like me thought we were entering a bear market phase at 1,800, you were sanguine. And I said something like, you know, people are afraid to miss it. And you said there's really nothing to miss. You have to give it time to see if it evolves into it, and you were dead on. So with everything that's happening now, I see you're showing Euro USD. What's your view here?
My view is that the white line that shall not be passed maybe in the next 5 years.
You're looking for 123 and 23.
There's so much resistance up here. I mean, my feeling, not only about the euro, about currencies, is that everything, all the waves and all the time frames are just subdividing and subdividing and subdividing. That's the problem with the equity market right now, is we keep getting, instead of getting clean trends where it looks like an encephalograph or EKG, where you get a spike and then and the volatility sucked out, and you get a spike and volatility sucked out. Look at gold, another market that's subdividing like crazy. It's because in the 8th or 9th year of economic expansion, that's what we've come down to. We've come down to a bunch of quants going in and churning the market around. Forex is a much more honest market, I think, now than the U.S. equity market. The U.S. equity market's just
That's interesting.
Completely managed. It's like a one managed account with one gigantic investor, and all the quants playing off of that. And it's starting to blow up on them. But we don't know if it's going to blow up on them this year or 10 years from now. Sooner or later, there's going to be a huge break, and that break's going to be when quant money turns out to be the dumb money, and algo's the dumb money, because it's not. You know, we at home guys, we're just real minor players in what's going on right now, and you've got the big big players. You know, you've got the advance of the billionaires going on in the world right at the moment, and the equity markets and all the markets are really their private piggy banks. And they're piggy banks through the quant funds and through the gaming of the system, the gaming of the structure of the system, as opposed to supply and demand. So I get very frustrated with the U.S. equity market. I mean, if you're sitting here watching this every day, you'll get a little bit of supply and demand, and then the rest of the day, it's like they already know what the final number is, and they're just managing it to the final number. I would like to know Friday's closing price the prior Sunday, because I think somebody does. I mean, it's just my own sort of cynicism about it, you know, and not that structurally it still works very well for traders, because Fibonacci works and Elliott wave works and Gann works, because you can't remove the structural element of price movement. What you can screw around with is the auction place, because it's a very unemotional environment, right? So it's very hard for many traders to adapt to that. I think in all markets. I like Forex from the standpoint of it's sort of very instant karma. You know, it's not like you're going to get a reaction to something, because you have so many players worldwide. Well, here with equities, we don't really have that many players anymore. We have something like, somebody estimated that the humans only take up 10 to 15% of all market volume right now in the U.S. equity market. So we're not big players. You know, we're there trying to game what others are gaming and ride their coattails. That's the best we can do. And we use TA to do that. We use our Elliott wave to do that. You know, and it's a viable strategy, but it's a very hard strategy for me to teach someone, especially someone who's reading through all the classic TA books, especially someone who's probably read my stuff or attended Blake's stuff for the last two decades, because we don't necessarily think the same way. We've had to adapt, you know, almost continuously to the rise of the computer programs, and that's changed the nature of it. For example, if we get one of these big wide red NASDAQ 100 bars, we all know that you don't step in front of that. So then you've got this just burst of illiquidity that goes on for 3-4 hours, where it just piles on. Some people go short. I choose to go back to the sidelines, because once set into motion, those programs are just relentless. The flip side of it is, I would naturally go, well, listen, when that thing gets to support, I want to buy it, you know, but I've learned that if I try to buy something like that in the last 2 hours in the market, I'm just going to get crushed. You can buy the last 2 minutes of the market day, but you can't buy the last 2 hours of the market day on a time.
Yeah, last week's a great example with that sell-off into Friday, and you had some stabilization Friday, but unless you had your attitude, there was no way you expected Monday.
Yeah, what's the, I mean,
Monday.
if you take a look at the cues, nothing's happened since the beginning of June. Nothing. Yet you'll keep talking about market at all-time highs, market at all-time highs, FANG stocks, FANG stocks. Nothing's happened in 3 months. I mean, nothing's happened. So it's a combination of, it's not, I wouldn't call it misdirection. It's a combination of people form-fitting because they, you know, I see the uptrend. The uptrend's easy to see. And it's also a combination of Wall Street wanting to keep the excitement up, you know. The volumes are dropping through the floor. It's not necessarily bearish, but what it is, it's managed. It's been put to sleep over the summer months, put into a coma. And, you know, there's still the boys out there who want to make their end-of-year numbers. And that's probably the only game right now is the end-of-year numbers, just like we saw last November. Those end-of-year numbers, if you thought you knew what the end-of-year number was on November 1st, you were way wrong, you know. But, you know, it would have been in November 1st, you thought it was the end of the world. But they found a way to pull success from the jaws of failure, you know. And that,
how about the night of the election? First time I've seen S&Ps limit down in a long time. And normally as a trader, you know, limit down, usually you have at least 1 day follow through, you know, and pools used to build up. And that turned on a dime. Icon left the party, bought $1 billion worth of E-minis, at least that's the story. But you have to believe that, you know, it's being gamed because a limit down move or a limit up move. Normally, when I was coming up in the business, you'd usually see at least follow through for an hour or two the next day.
But you see, that's it. We've repeated that pattern over and over and over again in the last 8 or 9 months. That's the EKG I was telling you, where you get the spike and then you get the volatility getting sucked out of it. And it's over and over and over again. And some people say that, okay, you know, when it goes to the downside, buy the dip, buy the dip. But this is not a classic buy the dip environment. You need a trend to buy the dip. And we really haven't had the trend. We've had shakeouts, these little V-shaped things. And the V-shaped things have sapped life from the market because the volume just keeps on dropping because there's a lot of people who've gotten washed out in this. There are a lot of trend followers that have these big red bars and they've sold at the worst prices, you know, and so a lot of that volume has been sucked out. A lot of players have been taken out. And, it's easy for the longer term trend followers, very easy for the long term trend followers. That's where I'm making all my money this year is on long term trends. I'm not, you know, for me the trading this year has just been scratches because every time I get a big winner, I turn around and some piece of chaos comes and slaps you across the face, and I get a good chunk of that profit taken away from me. And I've worked for months on, well, how do I reduce or eliminate that chaos factor in order to protect when I'm making more? And I still don't have a perfect solution because the chaos comes just as easily to the stuff that's perfectly technically organized as to say more volatile markets like a momentum market like optoelectronics or some hot thing that's going up 20 and 30 points, down 20 or 30 points. This stuff's happening on Dow components where you get these ridiculous like big bars that don't mean anything, you know? But for a technician, we're getting sucked out of it.
Yeah, you know, that makes me think about the little mini flash crashes we had in the precious metals last month, you know, where they took silver down $1, cleaned out every sell stop, and that ended up being the bottom. They did it in gold a few times.
At least that's more typical of the commodity markets. You expect the commodity markets are going to just punish the last suckers mercilessly before they turn, you know? They did with oil down to 40.
But not in 30 seconds.
Yeah.
You know what I mean, Alan? I mean, I've seen that, you know, my Twitter handle's Forex Stop Hunter, so I know that, you know, markets are always seeking out liquidity, buys and sell stops, but in my career, and it's probably as long as yours, I haven't seen it happen this fast in a matter of a minute.
Well, the speed of it too is because the human brain can't process it. Part of that speed is because not only the human brain can't process it, most people are very poor multitaskers. So if they're hit with multiple inputs in a very short period of time, they don't have time to process that information unless they have a very automatic system in place that knows exactly what to do and is going to react immediately if a price is hit, you know, or if there's some sort of momentum swing that sets off their signals. You know, at-home gamers, you know, and I use that term very derogatorily, you know, for the most part, make money, and then there's some folks at home who solved the riddle, but most of the time, most of us are feeding off at-home gamers as opposed to, we're not feeding off algos, we have to feed off of somebody. So we're feeding off the people who are worse than we are. So, you know, a lot of times they can't, if this shit happens fast, excuse my language, if this happens really fast, they don't have the capacity to process it, so they make mistakes, of which if you have a system that's very fast and accurate and knows how to respond to that stuff, you can take advantage of that stuff very, very frequently.
Yeah,
So,
I mean, this overload of information takes me back to a book called Future Shock by Toffler. You know,
yeah, I read that. I read it.
Yeah, it's like we're living it now, don't you think, Alan?
Well, my concern is the algos have become so efficient in dealing with the small fry. They're not dealing with those of us who've been around for years because we could adapt and adjust. That the liquidity just keeps getting worse and worse and worse in the equity markets. I've seen, you'll go and see a stock that trades 2, 3, 4 million shares a day. In the first 15 minutes, it's got a $1.10 spread on it. We didn't see that when they sued the NASDAQ specialists back in the mid-90s for artificially wide spreads. It'll have like $1 spread.
Yeah, and it was an eighth or a quarter then, and you know, before we went to decimalization and took the incentive out for open outcry for people to be there. So this structural thing, it's got to someday come home to roost, don't you think? I mean, I
do think the system's going to break down at some point, and we've already. It's like anything, because I'm just a real believer in mean reversion. So.
Right.
It's not a bearish call. It's the fact that we've gone up for so long compared to the fundamentals of everything that, you know, I got to stop and say this, though, but the market's a perfect reflection of the economic environment right now. I mean, it is. All those years of QE, you know, have created this sort of zombie-like economy. I mean, Janet Yellen wants to know why wages aren't going up. Just have 2 kids who are in their late 20s, and they'll tell you why wages aren't going up. Employers don't give a crap about giving them wages. They're not trying to retain employees, even though they're short of employees, because they're into financial engineering like everyone else, and human resource is just another part of financial engineering. So they're not going to, the boss says no pay raises, they're not going to give pay raises, and then if they lose 25% of their employees, they're just going to modify their business plan or some way to fit in with that. You know, so there is no sort of competing for employees that would create a rising wage environment, which is why you keep getting, well, the Fed, yeah, we see it coming, full employment. Yeah, but you know, it's not the 1980s, it's not the 1990s. Human beings are no longer human resources. They're just entries in the spreadsheet right now, as far as companies are concerned.
Boy, I wish I had a time machine after listening to you for 20 minutes. So anyway, we're living in this brave new world, Alan, and you brought up the Fed. Do you really think they're going to move ahead with trimming their balance sheet in September? And if we're having liquidity issues in the markets right now, do you think that's going to exacerbate it?
Well, they have a good record of not disturbing the market. Their big problem will come when the volatility gets away from them. They've been blessed by controlling volatility for so many years. All of their conceptions are based on volatility staying about as low as it is now. If the markets start to move, it's going to make it very hard for them to move that stuff economically and not have an impact on world markets. You know, that said, they're the ones who created the monster in the first place. There's a lot of people very angry at them because of that, you know, and we're still that monster's still sort of feeding on everything, and it got us out of the 2008 thing, but it also brought us into a depth of corruption in world politics that we haven't seen in 50 or 60 years. I mean, so the fallout from that in the non-market stuff that sort of feeds back to the market is still an untold story. You know, for us traders just trying to make a buck every day, you got to be so patient. I don't trade nearly as much as I did before. It's just so pointless. All my systems tell me to trade less and hold on longer during the trend in the trend following stuff, and to get in and out as fast as I possibly can on stuff that's not trend following. I know I lose more money waiting around than I do by being wrong.
Wow. The opportunity cost, you mean?
Opportunity cost. Plus, the longer you stick around, the greater the odds that something unexpected or non-technical is going to happen with your thing, because the algos know you're there. And so if there's any buildup of demand or supply on one side, they're going to go after it like sharks. And so as soon as you enter a position long or short, you become a member of a crowd. Hopefully your crowd is very, very small, But the longer you're sitting there, the bigger your crowd's going to get, probably, you know. So you want to get in there and get your money and get out. And the longer you stick around, I think Blake was talking about that. The longer the price holds a certain level, the more likely it's going to screw you. You know, if you're waiting for a short from off a high and it's not going down, then that's very dangerous. You want to sell short something and immediately be in a profit. That's really the only way to do it.
Do they have less control in things like the Russell, which you're showing here, and it's holding I believe that's a 200-day, but I mean, divergence after divergence, rising wedge, whatever you want to call it.
We actually, the three I follow, which is SP 500, NASDAQ 100, and Russell 2000, which I use instead of the Dow, in the sort of a Dow theory kind of thing. They actually they've gone in and out of convergence this year. Last year they were in divergence the whole time. One would be strong, one would be weak. There have been moments in the end of the second quarter, third quarter, where all three were convergently pointed to the upside, and I said, that automatically in my scheme opens the possibility of a parabola. That's what you see. That's what we saw in September 2008. We had a downside convergence, and 1 month later we had a parabola, the wrong way. So I've seen it, and then it gets right to that point and it just fades. And that's why you'll see, if you see the Russell chart that I have up now, I mean, there's no price rate of change since in 2007. You can talk about Russell all you want, but it hasn't. Is it down? It's just about down for the year, isn't it? Here's December, and here's where it is. Look at that.
Yeah, nothing.
It's nothing. It hasn't moved, and that's you could say that's not important, but that's all the market internals are buried in the Russell.
As an old school guy, I would call this, instead of consolidation, distribution.
It could be distribution. I mean, if you want to, you could look at it from. Oh God, I gotta find my edit jump. Add a thing. I don't have my.
It's a great look, though.
I want to pull up the OBV on this, because that's my basic. If you read anything that I do, it's fine. In Investopedia, I'm crazy about OBV, but only in the daily time frame. It's got to be daily, or else I can't even read it.
Look at that.
Yeah,
all those false breakdowns. Yeah.
It's right at the same point. Is it a distribution top? What you haven't seen the sellers, but you don't have the buyers. You could be the transfer of smart money to dumb money, and you wouldn't know it yet, because you're not going to know until it's over. I'm a little wary about using OBV on the big funds. I mean, if you look at the divergence here, see that on the Qs? I don't think a SPY has that divergence, but I could be wrong. No, look, there's the SPY divergence. This is everybody complaining about low volume, because that's what it's going to do. When I complain about low volume, I go to the fund volume first and compare it with the average 60-day average volume, and that thing's been dropping like a rock for the last year, for the past 5 years. Some of it is buybacks, some of it is boredom, some of it is the fact that when algos aren't in the market and they're not active, there's no volume at all. All those low volume days are retail traders pushing stuff back and forth. The algos and the big whales aren't in the market on those days. So you'll see a rally, and then the S&P 500 does 55% of its average daily volume, and you go, well, the retail pushed it up, and that's been a very accurate way of looking at the market for the past few years.
Do you think the bond market could get away from central planners easier than the stock market, because it's so huge? It's much larger, harder to control.
If we ever have an underlying theme that sticks with us for a long time, other than zombie growth, which is the 2%, 2%, 2%.
Right.
The bond market it's just like commodities and gold. Bond markets will respond to the big stuff. If there's a sea change between risk instruments and risk-free instruments, then the bond market will, it benefits, but not enough to break. The channel, the TLT highs in the last 6 years, right?
Yeah.
I mean, look at this.
Yeah.
It's just it's fooled every trend follower.
Right.
Because, I mean, the guys who are buying here don't plan on selling here. They want to get in and stick with it for a few years. So every time it's made a new high, it's screwed breakout buyers over and over and over again. And this is another sort of a distribution pattern in this way, right? I mean, you can't really use OBV on this, but this is saying, yeah, we're going to reward you, but it's such an overloved trade that the best we can do is pop a new high and then go back the other way and shake out. And that's what we've had since 2009. This is basically the QE chart right here. And the thing is, it's still contraction, just like every other market. I mean, you got endless contraction. You know, look, this hasn't done anything since 2013. But everybody talks about gold every day, but it hasn't done anything in 4 years. It's like, let's talk about something that's going somewhere. Hey, here's my idea of the day. This is going somewhere. This guy right here. See this? Literally one of my few favorite charts. Yeah, one of my few favorites. I have to probably put this on a weekly so I could do the fibs on it.
Okay.
Let me just show you this. And you can't really do this with XBI. I tried doing it. It's got a different chart.
Mm-hmm.
But there's a low right there, right? So you have the rally right to the breakouts here. Okay, trend line. Yeah, here's the cup and handle base, or whatever you want to call it. Here's the cup, here's the handle, here's the breakout, here it is coming down, and you see how the breakout's right on the 386.
Right.
Now, you know, knowing my markets the way I do, I'd like to buy a 300. It's open trading at 309 this morning. Okay.
Right.
I mean, I'd like to buy it at 300, but more likely, I would love to buy it down here about 295, because you just know it will, don't you? I think there's even an unfilled gap right here. Let's see. So, no, there's not really an unfilled gap, but see the 200-day moving average is slightly below. This trend line slightly below. The support is slightly below. To me, that's the kind of trades that really make it, because we're still this is still a bear thing here, because here we moved down to range support, then we broke range support. Now we've moved up to new resistance.
Yeah.
I want to see it take out all the real smart guys who loaded up on biotech. Yeah. And that would be, for me, a position to hold for months to years. You know, I think as long as it's very tight stop, you know, it goes down here, you sell it, you just stop out. But the reward risk of that is very, very phenomenal. And you know, if you don't want to buy the index, you got to buy the strongest components, which has, you know, it has risk in biotech because of the hot cold thing.
Yeah, they're wild.
Wow, look Gilead, which was one of the best trades for decades, and now it's just a piece of garbage, you know. So I mean, that to me is one of the few moving markets. The other thing, which if you follow me on Twitter, you know I'm very heavily loaded up on, is the U.S. defense stocks. I bought Lockheed Martin when President-elect Trump attacked the company on Twitter. I bought Lockheed Martin that day, and I'm up 51 points on it.
Wow.
You know, and then I bought Collins, which is the supplier to Boeing, because Boeing, which is really a defense stock now, it's not an airline company. They supply avionics systems to them, and now they're in merger discussions with United Technologies. That whole industry, because one thing you count on in a Republican administration is high defense budgets and a few good wars. You know, so I mean that's my people want that's my Trump play. I'm not betting on a stronger economy. I'm betting on more war.
Maybe there aren't any. Maybe we can't have good wars anymore.
Good wars, yeah. No more good wars. Only the more dangerous.
Apocalyptic type wars, yeah.
I figure it might be good for. You see, it's good because Lockheed is located in Baltimore, while Boeing is located in Seattle. So I figure, you know, Lockheed might be a monopoly someday.
In Baltimore or Seattle?
Well, no, Seattle, which is it's inside the concentric circle. You
that's right.
Where are you in the country? Where are you?
I'm in Temecula, California.
Yeah, well, you know. I mean, it was pretty interesting here. Somebody could have done a screenplay on it as long as Hollywood was still there. Last week, it was people were wondering, well, what do I do? What do I do? Where's the concentric circles go? You know, that's still out there. Duck and cover was alive and well in this part of the country last week.
I remember that. Yeah. Alan, you want to show your website, because I know it still exists. Blake wasn't sure.
But it's really only a placard or a placeholder now.
Okay.
So it sends people other places. So what I'd rather do is just send them right here, which is a good place to go. You see this?
Okay.
You see this, a contributor, and you see this number here, which says I've done 638 articles.
Yeah.
I've actually done over 1,000, but the older ones are scrolling off. And
You're prolific.
I do cover just about everything. You name it, it's covered. So if you want analysis, like it's equities and some commodities, like Trump Renner's first bull market in 4 years. That's a place to go. It's all 100% free, but this is a nice, good receptacle for my work. They'll be around longer than Hard Right Edge because they're really
okay. Okay, so you could follow Alan on Investopedia, And God, Alan, you covered a lot of ground in 25 minutes or so.
Yeah, and
I knew it was going to be great, man.
Please come and follow me. I'm active all day just because I'm bored. You know, if you can handle my sense of humor, I promise you get some stuff on the markets.
All right, and you know, I really wasn't trying to insult zonies that they couldn't handle a time change.
It's true.
I used to live by the point in time in Phoenix, so you know, I spent my time in the desert too, and it really was a pleasure to hear your voice and really talk about, you know, structural issues and, you know, things that we're all struggling with in this new era, and really a kind of a vote of confidence for FX that it's a truer market. And
God, yes.
Yeah, so, you know, that gives me some reinforcement that I'm at least teaching people in an arena that's, you know, the deck isn't stacked as much against them.
No, it's a very interesting market, and if I had gone that way originally, I may never have left it. Fortunately or unfortunately, I've always been tied to swing trading, and I can't really escape from it at this point.
Well, you know, and I was telling Blake, you were at Larry Pesaveno's house at the bottom in October of 2002. Yeah. And it's great to talk to veterans, you know, like you and Larry and Blake, and because, you know, so many people coming into the business now didn't have the same advantages we did back then, where you could find like-minded people. They're all saturated with hype on the internet. And thanks for bringing a dose of sanity to face today.
Oh, I appreciate that. Thanks for having me.
All right, Alan, and good hunting the rest of the year. And perhaps we could do this again down the road without any technical difficulties.
You know my number. You know how to reach me.
I do, buddy. Okay, everyone, thank Alan Farley, and you know where to follow him now. And everyone have a great day, and we'll see everyone tomorrow. And most of all, don't just count your pips, count your blessings. See everyone tomorrow. Adios. Thank you, Alan.